fundsupermart.com.
Hello everyone. Last year, many of the ASEAN markets performed impressively. So what lies ahead for 2015? Joining us today is Jalil Rasheed, Invesco's investment director, who shared with us his outlook on ASEAN equities. Welcome, Jalil. So what is your general outlook on the ASEAN markets in 2015?
When we look at ASEAN markets as there's 10 markets, there's 5 investable markets. Then within the 5 investable markets, you've got Singapore, which is a developed market. The other 4 markets, Malaysia, Thailand, Indonesia, Philippines, they're very much emerging. So they all have different challenges. It's quite difficult to lump everything into one. But I say generally, I feel that Thailand and Indonesia will continue doing quite well as a stock market on the optimism that there's a new leadership in place. With new leadership comes there's this expectation that something new would be implemented or will be announced, and there will be populist policies as well, which will make investors quite happy. And then Philippines has pretty much been on an upward trajectory and on very nice course as well, and so we hope that will continue. Malaysia would probably suffer a bit weaker sentiments. The stock market is still doing quite well. It's up 2.5% year to date, but externally on a macro side, they are impacted by the falling oil price, so that would damper consumer sentiment slightly.
With valuations expanded significantly over the past year, are ASEAN equities still worth investing in, and why?
They're definitely worth investing in. When you look at the question of valuation, valuations have gone up because of the amount of capital that's been put into the ASEAN markets. And we must remember that there's not many new names in ASEAN that have come on board over the last 5 years. So it's been pretty much the same number of companies, same names, but with a lot more capital that's come in, that's driven up valuation. So when we take that aside and look at the fundamental qualities of the company, there's a lot of opportunities there. Very well-run companies. I guess the more positive thing about ASEAN is that we are seeing companies that were once a bit more domestic oriented, who are now venturing beyond their countries and doing much better. So I wouldn't worry too much about valuations. Valuation is what the company trades at today. It's no indication of what the company could be trading at in 5 years' time.
In light of the low oil prices, how do you manage the risk for your funds?
The risk is managed at the stock level, not at the portfolio level. So we try to select companies that are already naturally hedged, that are not too much exposed to external factors. For example, we will never invest in a company just because to ride on the oil price boom, for example. We'll invest in a company because fundamentally they're sound. We have oil and gas players in the portfolio, but they are more providing services to the oil and gas industry. So they have a much more sticky customer base and have recurring income coming through on an annual basis. So they're not impacted by oil prices. Now, when we look at impact of oil prices at the country level, there are some countries that benefit and some countries that don't. So Malaysia is a net oil exporter, so they will probably see less revenue coming in now because oil prices have almost halved or below. But for Thailand and Indonesia, they're net oil importers, so they're now paying less to buy oil. It's also given these economies, Malaysia included, an opportunity to restructure their subsidy scheme, because if you recall, all these countries subsidize fuel because it's such an important component of daily life. And the low oil prices has given the governments an opportunity to eradicate that. So we look at it for me as a portfolio manager, I'm more concerned about my individual stocks. I look at risk from that point of view rather than as a portfolio as a whole.
Do you favor any countries among the ASEAN markets?
Well, we are bottom-up stock picking fund. So we buy and hold funds. We are country agnostic, sector agnostic. But when you look at the makeup of the fund now, the end result of the portfolio construction is that we are overweight in Indonesia. but our largest position is in Singapore. So a quarter of our portfolio is in Singapore. I like Singapore because there's good quality companies there, very well governed and strong corporate governance. These are very key criteria that we look at for companies. In Indonesia, I like it because it's there's been a lot of healthy growth plans, and the companies are quite exciting as well. So we've got about slightly under 20. We've got about 23% in Indonesia. I like that. I like Philippines as well. The challenge in Philippines is that the market is small. It's not very liquid, but it's surprised a lot of us by doing quite well and holding up. And what I like about the Philippines is that it is a full private market with very limited government ownership.